Hi everybody, welcome back. I hope you're doing well. If you're one of the thousands of tech workers that received notices this last week of being laid off, our hearts and thoughts are with you. Please let us know if there's anything that we can do for you, any planning we can do. Hopefully this video will include a few tips that might help you out, whether you're part of that layoff or whether you're changing jobs otherwise. So the first thing to talk about is health insurance. It's one of the biggest things that your employer provides for you other than your salary. You will most likely be offered COBRA. COBRA can be very expensive, so you'll definitely want to look into marketplace coverage through Washington Health Plan Finder. The one thing that we would like you to know about Health Plan Finder is that you may be eligible for subsidies to help you pay for those premiums. But please note, it will ask you what your current income is. And that's great. Your income is probably quite low when you're on unemployment, and it will offer you a subsidy. That's fine. Just know that at tax time, when we go to prepare your tax return, we will be recalculating that subsidy based on your income for the year. So if you're only off work for a short period of time and get back to work and have most of a year of salary, that subsidy maybe didn't apply, and you may end up repaying it at tax time. On the flip side, if you don't take the subsidy or take a reduced subsidy, and then at tax time we find that your income was in a place where you were eligible for more, you do get that credit at tax time. So err on the side of taking less of a subsidy if you can, but we certainly understand that money's tight when you're unemployed and on unemployment. With that, unemployment income is taxable. If you elect withholding, it's usually coming out at about 10%. Generally, that's not going to be enough. So definitely keep in mind that, again, you can elect out of that withholding and have more money in your pocket each week, but that might come back to bite you later, so just be careful. Definitely let us know if you have questions on that. If you received severance as well, that severance is taxable just like any other compensation, and your employer would have done withholding on that just alongside your wages, so there shouldn't be anything you need to worry about there. So when you get back to work, the first thing you're going to need to do is file a W-4 for your new employer. And if you've been out of the loop for the last few years, the W-4 has changed quite significantly. So here are a few tips on filing your W-4. The only part that's actually required on the W-4 is your name and your filing status. This part hasn't changed. You're still going to choose whether you're filing a single or married or head of household. Please note, this does not have to match your actual tax return. It is still a completely valid strategy to mark single even if you're married, because you would like to have more withholding coming out of each paycheck. That's totally fine. The next section, step 2, is for multiple jobs or a spouse that works. It's just a little checkbox. We often recommend marking this checkbox, particularly if you are married and both of you work, or if you have income from any other source. This checkbox is the equivalent of, on the old W-4, choosing 0 instead of choosing 1. So if you choose single in that first step and you mark this checkbox, it's the equivalent of single and 0 on the old W-4. It's going to be the most withholding that you can have your employer take out, short of asking them to take an additional amount per paycheck. So we often recommend this one. This last section you can leave blank. There's no requirement that you complete this last section. If you enter your dependent information, it's going to reduce the amount of withholding per paycheck. If you add other income on line 4A, it's going to increase your withholding. If you add deductions, it's going to decrease withholding. These are all just lines that are trying to manipulate withholding to where, in an ideal world, particularly if you were single, you had a source of income, it was steady throughout the year, maybe you had a dependent, that this is designed to have you break even at tax time. Not get a refund, not owe a bunch, but just to break even. The one line on here that you might want to complete is the one that's extra withholding. If for some reason there's an extra amount that you'd like to have come out of each paycheck, and again, we can help you calculate that. That's the line that we would use for that. So that's an overview of the new W-4, relatively new. It's been a few years now. Just plan with your tax pro, whether that's us or somebody else. Keep your tax pro in the loop. We would like that last final pay stub from the old job, information on any unemployment that you've received, and the first full pay stub from the new job that's got benefits kicked in and your new W-4 kicked in, so that we can mesh all that together, do a projection for you for the new year, and hopefully catch early if you're going to be dramatically under withholding or over withholding, so we can help you adjust your W-4 accordingly. So again, please let us know if you have any questions. If you have anything that you'd like us to cover in a future video, I would love to hear it. And otherwise, be well and have a great week.